Chokalingam is with us. As always, Ajay Srivastava is joining in today as well. Managing Director, Dimensions Consulting. Choka, good morning. Ajay, good morning. Choka, first to you. Out of all the long list of numbers that I read out, anything stands out to you?
Nothing. I mean, as we were discussing earlier, the whole corporate sector is going through stressful time in showing earning growth. So whichever company is able to grow still because of the management quality or because of the material costs going down, they are rewarded handsomely. But that cannot continue. As I've been saying, from February onwards, there has been a strong rebound in the material prices. Oil prices moved up by as much as 70%. So that's going to be a lot of stress for these companies in terms of margin contraction. And therefore, this kind of super valuation which they are enjoying now cannot be sustained. So therefore, I suggest that retail investors be smart and start booking profit in some of these counters.
I mean, wherever valuations are high, wherever there is performance.
Yeah. Valuation is super high. Like for instance, I mean, Asian Paints 50p, Berger Paints, above 40. All these are not sustainable.
Pidilite, you look at the numbers?
Same, yeah. Valuations are highly stretched. Even Voltas, for that matter, is a very good performance.
Yeah.
But this kind of valuation is not at all sustainable.
Some 25, 26 times for AC company. Ajay, what's your view? Aggregate market. Do you have a big view in terms of what we do from here?
I think two things, Prashant. One is that the aggregate market, I still believe that there are a lot of bullish overtones in the market even today, and we saw it yesterday as well. Domestic buying remains robust. So I think more than fundamentals, which is the unfortunate part, or let's take it as a market risk, it's liquidity driving the market. So when we had the risk on come in February and March, we saw the prices going up, share prices. Now we got the domestic investor back. We still held pretty well decently in the last 1 month or so. So I think it's going to be a battle between domestic optimism, if you ask me, compared to international events, including the Fed rate hike, including the fact that emerging markets are seeing outflows. Fundamentally, I think everybody will agree that the market is a little on the expensive side. But having said that, the view has been that if the turnaround happens, you are buying at the first leg of the big economic revival. Now, that's a theory which is still to be tested. So if you're a believer in the theory of a big economic revival, you may buy at even these P's and expect that by the 17 and 18, it'll normalize and give you a healthy return. If you are skeptical about the economic revival, perhaps you would be on the side saying it's wise not to get into the market. We, are on the side that it's wise to get into the market on a very select basis, because in any market, there are good quality companies available and they're cheap available. So this is a market to be stock specific now. It's not like buying pharma or buying banking or buying this thing. You got to pick and choose 2, 3, 4 nuggets in each industry and hold them and with conviction. So it's not about the broad market. I think it's about sectors specific and individual name which will outperform the market. We've already seen it in the past for the last 6 months or so, that individual names have held firm and given a fantastic return compared to the rest of the market. So investors may be well advised, look for stock stories rather than market stories.
No, that's good advice. The markets have started trading, so there's a 6-odd point change on the Nifty and about a 28-odd point change on the Sensex. Let's just do the results, read through quickly. Maybe we could put a Voltas to begin with. All right, Lupin is down 6%, 1556 on Lupin. So that's a 100 rupee cut. The stock jumped earlier and then it sold off to be absolutely flat by close. Voltas is again almost unchanged, 0.5% odd change. Sobha, let's put that one up, see what's happening. Okay, Pidilite is up 2.25%. That very strong margin performance from Pidilite. Sobha is down 2.5%. Numbers were weak, and Gujarat State Petronet will come up as well. Again, there's a bit of a volume miss for GSPL. Stocks up about 1.7%. ENIL, that's Entertainment Network, which reported numbers will come up. I mean, actually profits are lower year on year. ICRA reported numbers, small growth for ICRA, 10% growth, stocks down 1%. Future Consumer reported a larger loss compared to the third quarter. Stocks down about 1.82%. Infinite Computers reported earnings as well, where there has been a profit degrowth quarter on quarter. So stocks down about 5% or so. So these are specific results in focus. I just want to look at Lupin once again very quickly, see what's happening there. because numbers were strong, but the stock is actually selling off to about 1574. It's about a 5% cut. Okay, I just get to Lupin in a bit. Let's look at Sun TV as well, which sold off, pretty sharply. And where do we have Sun at now? Sun TV, that is. It'll come up. There you go. About 1.25 lower on Sun TV. That's about 367 as things stand. All cargo logistics is up about 3.25%. I think some other logistics stocks I'm being told are jumping up a little bit. Gati, etc., etc. 75 points on the Sensex, and I think you've got the Nifty, which is up a little bit as well. Snowman Logistics is up about 2.5%. 7805 is where the Nifty now stands at this point in time. Tech Mahindra, M&M, Dr. Reddy's, Hero MotoCorp, Bajaj Auto, ACC, you got Eicher Motor, Ultratech, etc. They're all up on your screen. So the most active price and volume change will be on your screen. And let's look at the broader markets as well very quickly, because I think we've mostly covered what's happening on the Nifty. I think we already started to do that. Gati and some others are on your screen. Kolte, Patil, Bajaj Holdings, etc. Choka, any thoughts on the Lupin? I know your pick in pharma is JB Chemicals.
Yeah.
But any thoughts on Lupin?
Yeah, I've been avoiding large pharma stocks continuously for last 1 year, even little more than 1 year. I've been recommending only Biocon and JB Chemical. Now, it is not a problem with the Lupin. It's a problem with the entire large cap pharma industry, which have got a reliance on US and European markets. All of us know. So there has been a consistent contraction in the PE multiple for these companies, because even if you look at Lupin now, year-on-year basis for the full year, there is a degrowth in the profit. These are the companies which used to show 30% profit growth year-on-year consistently. So the market is not able to digest degrowth in profit. For the full year, I'm saying. So therefore, above 30p is not sustained in the market. So till you get a comfort on some stability coming in from US FDA in terms of giving warnings and observations, alerts, you are going to have a problem. And I doubt whether you can make a big money in such a large cap pharma. Go for mid-sized pharma companies which have got relatively lower dependence on US markets.
Okay. Did you still like JB Chemicals, right?
Certainly.
JB Chemicals, Biocon, etc.
Yeah, Biocon we are holding. It would be unfair on my part to say bullish buy call on this because it has run up more than 50%. But JB Chemical, even till yesterday, we have been continuously accumulating. I would continue to accumulate around 260 level because huge cash, good management. Management is giving good dividend. Last year they gave about 14 rupees special dividend. Still a lot of cash left. So I also personally have invested in JB Chemical.
Absolutely. Any thoughts on Gujarat Pipavav port?
Relatively it is better in terms of leveraging as compared to Adani ports. What is happening is that all of us know the global trade is not growing. India's trade is contracting continuously for more than 17 months in a row. So therefore, all these companies are getting impacted. But of course, one can do bottom fishing. If they fall further, even 3-5%, definitely one can do because they are still showing a decent profit, including Adani ports, despite a degrowth in the exports. So if global economy picks up, then one can definitely expect some return from these port-based companies.
You have also Gujarat Pipavav announcing a dividend for their first ever dividend as well. This Gujarat Pipavav. 15 points on the Nifty and about 55 points on the Sensex is what we have at this point in time. So, Ajay, do you expect the aggregate market to come off? 5-7% possible, or you think unlikely?
No, I think it's possible anytime. In fact, with the last night's the P note change which has come through, Prashant, we all predict that nothing major will happen, but it definitely will cause a dislocation in investment because lots of companies do adhere to KYC norms equivalent to India, but there will be a procedural move to KYC Then when you sell a portfolio, you need the approval of the P-note issuer. Now, all those are adding to costs and impediments into the investment climate into India. There is no doubt about it. And there is also no doubt about it that there is a portion of investment of P-note which qualifies, perhaps may not meet the KYC norms. So there is an overhang of the market of the P-note change which has taken place, which will play itself out in the next couple of days. That's one. Number two, global risk off is kind of coming through very clearly. And as we go towards the Fed, if we go towards Brexit, there will be volatility in the market. The third, of course, is I think the other gentleman alluded to the fact that we are also having an issue with oil prices going up. The drought is taking its very heavy toll on the economy. So far, stock market has ignored it, but how far they can ignore it. So I think put together all the compulsions of the market globally, liquidity, internationally, domestically, there is a chance that this market might slip off 4 to 5% quite easily. But as I said, within the 4 to 5% slippage, we have seen in the past also some companies hold firm or even offer become better opportunities to invest in. So we are saying market will, I think, in my view, go off 4 to 5%. I don't think there's an issue with that. It will slip off closer to June or something thereafter. But hold on to your investment portfolios where you got stronger names sitting there. And there are lots of stronger names sitting there with good performance, including commodity companies. If you look at the commodity companies of India, Prashant, 30 to 40% valuation of these companies comes from cash on the balance sheet of these companies. So when you're buying these commodity players, natural resources players, you see their balance sheet, it's amazing, no debt, and you've got 30 to 40% market cap coming from cash. So irrespective of what happens to the market, these are good buys. So every correction, you need to buy these companies because no economic revival can play out without natural resources getting the first benefit out of it. And you already seen the first benefit of cement, which we saw in the last 1 year. Cement has been a clear outperformer. So I think the next stage has come that whether it is coal, whether it's iron ore, these are the kind of companies which will be the next big, I think, rally points in the market after cement has been through its upswings.
Metals, you've had a bit of a change of heart. I mean, I remember you telling me you won't want to go near them, metal stocks. In our earlier conversations, you've liked cement, you like construction stocks, you've liked defense PSU companies, private banks, but I've not heard metals from you. Today you are. Which ones in particular, Ajay? Because there are lots of them.
No, not metal, Prashant. As I said, iron ore, coal are two places where we think the companies in India we are positioned in those companies, so for disclosure purposes. But I believe that these are the two companies or two pockets which should give a healthy return should there be an economic revival. Cheap companies, strong balance sheets, no debt, high cash on the books. So, the combination is perfect. Unlike global commodity companies, which are leverage and so on, these companies in India are fantastically positioned. So I'm not chasing metal story, I'm chasing natural resources at the base level. I think there the big kick is coming out.
Any thoughts?
Yeah, I completely agree with him on Coal India. In fact, even today we have reiterated our conviction. It's a very close to 52-week low, still sitting on cash of 70 rupees per share, and it makes almost 12,000 to 13,000 crore profit per annum. So, and government fiscal condition not going to improve substantially even in the current fiscal. Again, as I said, oil prices started moving up substantially. So there will be little burden for the fiscal balance. So therefore, the government will continue to squeeze cash-rich companies like Coal India. So if Coal India takes 10 rupees from annual profit, 10 rupees from cash, still it can give you special dividend of about 20 rupees for next 2 years at least. So I would strongly suggest buy on Coal India.
What about the other one? NMDC again,
NMDC,
strong dividend story, but
NMDC for long term it's a great company because they are getting into steel. The cash is slowly getting drained towards steel project, but certainly for medium to long term investors, I would suggest this also. Because the backward integration in terms of sourcing captive iron ore would help this company to maintain a very good margin in the steel business once that is launched. So therefore, definitely for long-term investors, one can consider NMDC.
NMDC. Ajay, now the state election results are out and this drumbeat around GST is beginning to sound once again. If you look at the numbers, the BJP will gain 4 seats in Rajya Sabha out of Assam, but that too only in 2020, right? Because of the schedule, the way members retire, etc. there. Is there anything to expect that? I think Mr. Jaitley has made some comments in an interview or two that we'll pursue GST aggressively, etc. Any reason to believe it will get done in the July to August monsoon session?
I think so, Prashant, I think so. And I think the reason what we're catching up in Delhi is, and as of particularly yesterday, is that the opposition itself, parts of it are in favor of GST, parts of it I think were ideologically opposed, which will continue to oppose, which is the left. But I think broadly the consensus is emerging that Congress being a little more on the back foot than it was maybe about 6 months back, would perhaps not be a formidable opposition to this, because you already seen TMC declaring its support for it. So I think GST is reality in terms of getting passed, in my view, in the monsoon bill. Implementation will take at least a year and a half, because the state governments have to pass the legislation, the rules have to be drawn up. But you know, people, I have a laugh at people who assume it's a magic pill which Indian economy will swallow and something great will happen. People not understanding that quite a bit of Indian economy and companies are today net of VAT and excise much below the reference rate of 16 or 18%. So there will be one pocket of a segment which will gain from GST. There will be another pocket and companies which are going to lose out on GST, including the service tax rate will balloon from now is 15 from 1st of June. So that will go up to a reference rate of 16 or 18% depending on the GST rate. So it's not all hunky-dory. I think my net gut feel says that net of GST would end up transferring substantial resources from the private sector to the government sector. And I think that's people not factoring in that purchasing power in the private hands will go down. So yes, there are benefits of efficiency, but whether that will translate straight into the bottom lines of companies, my guess is perhaps not. And my guess is that quite a bit of companies may actually stand to lose out post GST compared to present scenario. Of course, logistics company and all are going to gain, because their holdups at the borders, etc., will drop dramatically. So the utilization of fleet will be so much better, and there'll be less need of CNF agents. People will be transmitting goods directly. So there is a issue, benefit to logistics company by and large. But is it a magic pill? Perhaps not. For some companies, it could be perhaps a bitter pill.
That's a pretty good way to look at it. Choka, any thoughts on this?
I firmly believe that it can be implemented anywhere in 17 or 18. These yesterday's results won't make much impact in Rajya Sabha. Rather, the elections to be held in 17 and 18 will give almost close to majority for the ruling party in Rajya Sabha. So therefore, I am expecting GS to be passed only end of 17 or early 18, not before that. But in the short to medium term...
Sorry, to be passed only later, not this year.
Not this year. I don't think it will be passed this year. And I firmly believe that more than GST, what matter for the Indian market is the monsoon. If monsoon fails, even if GST is passed, we will have a severe crash in the market. So I would give a lot of emphasis to monsoon, because pathetically low the storage level, and this will lead to spike in the food crop prices. Already we saw the material oil price going up. That the whole thing will get reversed with the monetary easing. So it can be a very dangerous situation in case monsoon fails, but very too early to panic. So one has to stay alert.
By the way, Choka, were you surprised with the results out of Tamil Nadu?
Yeah, a little surprise. I have no political leaning for either of these two parties, but it was a big surprise.
It was a big surprise. What does it mean for prospects of Sun TV in your assessment?
Fundamentally, after this correction, it is a very attractive play, no doubt about it. But then let us not forget the fact that some of the cases are still pending, and the correlation of Sun TV market price with the news coming on this so-called scam is very high. So I would, remain alerted. Only for risk-taking people, I would advise. Or probably whenever such quote legal news come, adverse news come, that day one can pick up.
Do we, Neha? Do we have the graphics for Sun versus Z? If we can okay, I think we'll just put that up. But I think it was one of the brokers that compared Sun TV and Z over the last 5 years and 3 years over various parameters. I mean, Z since 2011, last 5 years, is up some 250%. Sun TV is actually up 3 or 4% or so. On an EV by EBITDA basis, Sun TV trades at 7 times, Z trades at about 18 times or so. So there's a huge difference. I mean, of course, growth in ad revenue has been much higher for Sun for Z compared to Sun. Subscription growth is broadly similar for both. EBITDA margins for Sun are much higher, by the way. It's the opposite. 67, 68% EBITDA margins for Sun. So in the 30s for Z. So this is an interesting way to look at both companies. But any thoughts, Ajay, on this? Sun TV?
Yeah, of course, I think Sun TV is a great buy, but not at this price, Prashant. It needs to correct more. It is still pretty high compared to what we believe it should be bought into. But it's an excellent company to buy in, and irrespective of what happened to the government and all the legal cases, I think if there is a substantial correction, and I think there is a correction will be around the corner, it should be a good buy at any point of time. Even today, you can start accumulating it because, in spite of the fact they lost the power or they haven't come to the power, I think with the new amount of MLAs in the government, they have a significant now say in the Tamil Nadu political affairs. It will be very difficult for the central government to ignore the fact that the kind of MLAs they got in the assembly and looking at the next elections or the national elections,
Ajay, the point is
DMK would play a bigger role. So I guess you could easily buy this share.
No, I'm saying even over the last 5 years, under AIDMK, Sun TV is by far the most dominant media group, right, in the 4 southern states.
No, actually, there is a very interesting data point, which is not discussed widely about Sun TV. In the last 5 years, the competitive channels like Vijay TV, Kalenja TV, they have captured a lot of eyeballs. So Sun TV in relative terms is not able to grow the way they used to grow in the past, partly also because of these 2 reasons. A lot of programs of these 2 competitive channels have attracted huge eyeballs. They have partly eaten into the market share of Sun TV. So that also contributed for lack of substantial growth in Sun TV in the last 5 years.
Okay. But at this price, Choka, sorry, you said you look at it or no?
No, I looked at it. Fundamentally, I am quite attracted to buy. But my only fear is that,
that Aircel Max's thing.
Post this case, since they have lost the case, there could be some revival of those issues. And whenever such news come, there is a possibility of some dip in the stock price. So conservatively, I would wait for such opportunities to accumulate rather than rushing it.
This is the graphic Choka was talking about. Look at the stock price first, last 5 years, 230% for Z, minus 4% for Sun. Ad revenue growth is for the last 3 years. For Z, it's 12 to 29%, that range, 12 to 29. For Sun TV, it's been 8 to 12%. Subscription growth for Z has been 10 to 23. For Sun has been 8 to 26. It's largely comparable on the subscription growth front. And there are other indicators as well.
This, as I said, it is for 2 reasons. So one, despite the severe competition in the Hindi channels, among the Hindi channels, ZTV maintained its growth. On the other hand, Sun TV in the last 5 years has been, to some extent losing market share to Star Vijay and Kalenja TV. It's like Honda Motor. From the 0 market share, it has captured 25%. Same way, the Kalenja TV also from 0, it has captured a sizable market share, majorly at the cost of Sun TV, because both have a more or less same political alignment. So it has been, in my view, at the cost of Sun TV. So this fact also contributed substantially for lack of fast growth for Sun TV in the last 5 years.
Let's put up Adani Port. I just want to talk about that because Moody's yesterday revised their outlook downwards. I mean, they've reaffirmed the rating, but the outlook has been revised lower. The stock crashed about 6.5% or so. It's already at a 52-week low. So they've highlighted concerns including weakness in coal traffic volumes. I mean, that's the reason why Adani started falling first from 300 plus to where it is now. And of course they reported results early in the month of May. Then not just business, but there was also intercorporate loans and concerns about that. I mean, loans given to other group companies, related party advances, etc., which spooked the market. It's a huge underperformer. I mean, it's underperformed the Sensex by about some 30% or so. So it's pretty significant. Any thoughts on this one?
Yeah, certainly. As we discussed earlier also, you have mentioned the very right point, a relevant point. India, till about 18 months, we were scared of import bill on account of import of coal. Now suddenly, we have started reducing coal import substantially. So that actually hit, many port-based companies. But as I said, despite all these odds, these companies still having a decent business and volume growth. Definitely in the medium to long term, I think this can start rewarding. But as you mentioned, the lending within the group. All these promoters have to understand and look at Kane India. Despite being monopoly in the oil, oil is supposed to be the scarce commodity in the whole of India. Kind of valuation it enjoys. At current market price, the cash plus lending to Vedanta Group is almost 80-85% of the market cap. So poor valuation. So to that extent, similar logic is applicable to Adani Port. Partly, lower valuation is because of this intra-group lending. So promoters have to, clean these. Then definitely they can hope for a reward in the market.
Choka, all the logistics stocks are jumping. Would you make the connection with GST there? Or some people must be making the connection with GST, bidding prices up.
Speculative trade. Look at the Gati, it was trading above 300, the way it came out. Or look at the small logistic. Unfortunately, in many mid-cap stocks, easy to build the top line and then make money in the market than the bottom line. Because, the investors also miss out, the consideration for the bottom line. So just go after that top line and the theme and then they burn the finger very badly. So this story will go on.
Ajay, any other trends, highlights, anything worth putting out for the viewers, Ajay, before I wrap up?
No, I think, Prashant, you ignored you've forgotten your favorite ones, the nationalized banks, which are into more turmoil than what we all thought of. And the great revival story of nationalized banks seems to be petering out. So I think it could be wise for investors who were banking on the big revival of the PSU bank and the bank board bureau being made, etc., perhaps are now licking their wounds. And I think they need to understand that perhaps that is one place which is still a minefield, irrespective of where the economy goes.
Okay, my favorite to bank with. Okay. Ajay, is anything happening on the ground as far as real estate goes? Is there a turnaround? Because stocks have done very well. Take a look at Indiabulls real estate here in Mumbai or DLF, for example. So equity investors seem to be latching on, but anything turning on the ground?
Yes, there is movement, Prashant. The fact is that there is definitely movement in the secondary market, which is already taking place. Not necessarily in the primary market, but secondary market offtake our company has been seeing is now picking up. People are starting to buy in. And I believe that the prices have kind of bottomed out. So to that extent, there is a little bit of benefit for the real estate companies that price reduction is not going to happen very easily. And I think you will see more offtake as the secondary market supply starts to dry up a little bit. So there is definite traction in the market. There are people now, and you can see that in home loans, which are increasing quite substantially, that there are people now started to buy into the real estate market and not waiting anymore for price corrections.
Thanks very much, Ajay, Choka. Appreciate both of you coming in with that perspective. Have a good weekend, gentlemen. See you later. See you soon. Thank you.
Thank you.